Back with First Trades. Let's get into a conversation with the management of Allied Blenders and Distillers. We have Mr. Alok Gupta, the Managing Director of the company, joining us on the show. And Mr. Gupta, hi, morning. Thanks for your time today. Now, help us understand and talk to us a little bit about your company. The company is on a transformational journey led by portfolio expansion, your entry into super premium and luxury segments, and investments behind backward integration. You have faced challenges in the past, but do tell us, what is the outlook for the next 5 years? What is the roadmap and turnaround strategy?
Thank you for inviting me. The strategy essentially has three pillars. The first is in terms of margin expansion. That is on back of the portfolio that we're re-engineering. Our P&A salience are up to about 46% in volume terms and close to 55% in value terms. Margin expansion on back of the backward integration that we're doing in the core area of raw material, which is ENA and malt, and PET, which is our packaging input. We expect on back of this backward integration beyond. So look at not just the Indian market, but look at overseas market. We have expanded our footprint from 17 countries to now almost 27 countries. And we're looking at expanding the footprint to another 4 or 5 countries. So by end of this year, we should be available in about 30 across countries across the world. And the last piece is on back of FTA. Since we are one of the largest importer of bulk Scotch, we also expect the margins to improve. So that's really one very strong pillar in terms of margin expansion, both in terms of value growth, volume growth, and absolute gross margin increase. The second piece really is in terms of how we are managing our capital. I think we are both prudent and sort of deploying it in an intelligent manner, making sure that the investment that are going into our projects is being put on projects that have a very clearly identified return on capital. It has a very clear path in terms of when and how soon can they become EBITDA accretive. And third is to continue to drive customer centricity. I think Indian consumer is sort of changing and evolving, and therefore it's very important to keep a pulse on what's happening today and what's likely to happen in time to come, and make sure that our portfolio remains relevant. So these are three essential themes on back of which the transformation journey is being currently planned.
All right, Alok, hi, morning. This is Shrishti also joining in. Good to note about your long-term strategy, but you have also set very aggressive targets rather, because from 12.7% in FY27, you are targeting 17% EBITDA margins by FY28. Help us understand what factors will drive this margin expansion. What kind of cost efficiency measures is the company already taking?
So currently operating at about, let's say, 13% margin. On back of the backward integration, we expect the entire benefit of backward integration to get baked in by over the next 2 years. That will take our margin to from current levels of 13% to about 15, 16%. And on back of the FTA benefit, we will also see further margin expansion of 200 bips. So it's a combination of where our current economic engine is, the incremental margin to come on back of backward integration, and some to come on back of the FTA.
Okay, and also help us understand, so once the India-UK FTA comes into effect, how much will import duty on Scotch come down by, and how much margin expansion will this lead to?
Duty will come down from current levels of 150% to 50% by 50% to 75%, and for us it could mean up to 200 basis point margin impact.
All right, Alok, with this, we'll let you go on that. But really appreciate you taking the time out and speaking with us. We do have a little paucity of time, but good to note about your long-term strategy, and wishing you all the best for that. Thank you.
Thank you so much.
All right, but with this, viewers, it's time now once again to slip into a very short break. Don't go anywhere. We'll be right back.